When I get around to compounding, I always use the example, you all have seen it on the web, about the penny. And so I'm going to ask this engineer right here, would you rather have in this hand $750,000 or a penny doubled every day for 30 days? So you want the penny, right? And I knew that. So instead of $750,000, I'm going to make it $2 million in my right hand versus the penny, doubled every day for 30 days. You still want the penny. So I figured that. How about 2,000,001? Well, I mean, it was, this choice, it was 2 million before. You still took the penny. I'm saying, how about if I make it 2,000,001?
That's a lot of money. I picked the 2 million.
Yeah, see? Now, who knows right off the top of the head what that figure is?
10.8 million.
Yeah, it's 10.8 million. It's 10,737,000 or something like that, and some change. And so the simple arithmetic is it's 100% return for 30 periods, And that's the power of compounding. And so the really great thing about compounding, I tell people, is, if you have a stock that's going up 10 times, the next time it doubles, it's going up 20. And the next time it doubles, it's going up 40 times. What? Compound interest and compound return is just, it's staggering. Actually, I have a correspondence with Warren Buffett about this, and he always has said, as it relates to compounding, either you get it or you don't. And I wrote him a letter and I said, that was not my experience. My experience was I didn't get it until I experienced it. And that goes to this whole issue of investing. I have never been able to learn from other people's mistakes. I have to make my own. And so this process is designed to help me and my colleagues and partners have focus as it relates to how we're going to invest. Contrary to that is everything you see on the TV in the morning on Squawk Box or all those things. And they have a different business model. And their business model is mostly supported by financial institutions and other consumer institutions who want your eyeballs. And if it's a brokerage firm that's sponsoring it, the definition of a broker is to create transactions, right? You're advertising people, they want to create transactions, right? And what's the best way to create a transaction in the brokerage industry? Create what I call false expectations. And the false expectations are the notion that XYZ company earns $1.37 in the quarter. And the first thing that happens when they release their quarterly reports is everybody comes out and says, oh, they earned $1.38, they beat by a penny, you better buy it. Or they earned $1.36, they missed by a penny, you better buy it. Well, if you stop and think about it, unless you're very adept at trading the market on a daily basis, it's a sure loser for you. It's bad for your economic health. And as it relates to trading the market on a daily basis, there are very powerful computer algorithms out there using all kinds of information not available to most of us that are competing against you. So I just make that observation. We try very hard to be investors in the value of businesses as opposed to speculators in the price of shares. Now, do you remember what a penny doubled every day for 30 years is?